Securities. Jagannathan, good afternoon to you. Thank you for joining us. Let's not discuss fundamentals for a minute because they make little sense.
Absolutely. I think they don't have any relevance today. For example, on the day when the government is openly admitting the downward revision of the GDP, I think the market is running away. That shows that the liquidity driving the show, and moreover the anticipation of maybe some stimulus package either from US or Europe is keeping the momentum up. Of course, there are some expectations probably after the Chidambaram taking over as finance minister, some policy measures. Till the time they happen, it's very difficult to finalize the opinion.
Absolutely ignoring the fundamentals, you'd have to say. So you've got the markets on a tear, and not just that, I think we're supported by the global cues as well. So if we just quickly pull up the European markets, you can see a flicker of green coming in there. So there's quite a bit of resilience. But Jagannatham, in terms of the consumption space, one cannot argue that there are very expensive stocks. Would you pick anything from there?
I think it's somebody is looking at momentum when the fundamentals is not the theme to discuss. Then I think momentum one can always play with either HUL or ITC. But the fact one should remember is that now they have reached a point, I think valuation wise there is no point in getting into the valuation. They are absolutely stretched. I think if the let's say economies turn around or if the market mood turns around, probably these stocks may top out. That's the biggest risk. So if the Nifty is heading towards say 56, 5700, meaning thereby HUL and ITC may lose some of the sheen. So that risk is always need to be kept in mind.
That's an interesting characterization, Jagannathan. If you want to play momentum, you buy HUL and ITC. I thought they were classic defensives.
And when you said that not to talk the defenses and fundamentals and the logic. So when the liquidity is the theme, then all the logics go out of the window. That's the whole worrisome part. At times, the mistakes in the trading do happen at this point of time when people get into this mind that fundamentals not the theme. Then that's exactly the.
Jagannathan, forgive me for interrupting you there because the Prime Minister Economic Council, well, they've tabled the outlook for FY13, but let's hear from the man himself.
Can we just one by one you
What do you want? I mean,
sir, one to one, sir. It will just take you 2 minutes with you come down. I think it will be better. यहीं पे exactly you can one by one.
what do you want? Shoot your questions immediately. Okay. Yes, sir. So what you can only do is in general. Yes.
Thank you. Start just and everything. Thanks very much for talking to us. 6.7% section. Would you understand? Are you optimistic or a little more pessimistic then? We are talking about a couple of
I think we have looked at the potential that exists in the various sectors of the economy. We have done a detailed analysis of the possible growth rates in the various sectors such as agriculture, mining, construction and so on. And we have come to the conclusion that the potential exists for the economy to do a little better than last year. We did, even under the worst circumstances, 6.5%. If anything, in many of the sectors of the economy, the growth rate can be higher, and therefore, overall, it is possible for the economy to grow at this point.
You are very positive in manufacturing, giving it a much higher growth rate than last year, and you expect it to pick up in the second half. Where is the optimism coming from, considering the latest data is not very optimistic?
No, I think the growth rate in the first half of last year was quite robust in the field of manufacturing, and therefore we are measuring in the first quarter of this year against a very high base. The second half of last year, the manufacturing growth rate came down quite sharply. As against that particular background, I think there are indications that sectors like coal, steel, cement have shown improvement, and therefore overall growth rate higher than what was experienced last year is possible in the field of manufacturing. In fact, even then, the manufacturing growth rate will be much lower than what we have seen in the previous years.
So the fiscal deficit target,
I think
deficit target, there are two things that will bridge the fiscal deficit. One is inflation, one is the fuel prices, and the other is GST. Both these things will
GST will have only a long-term impact, not in the...
So, but both things are not going to happen, sir. We have a political
No, I think as far as the diesel prices are concerned, we can arrive at some kind of a political consensus, but in any case, a move forward in that direction has become absolutely essential to contain the fiscal deficit.
Many people have questions.
Well, Dr. Rangarajan pretty much has stated the obvious, which is that Indian economy is going through a tough patch of slowdown. They are blaming it on monsoon, Europe. So nothing new in terms of outlining the big picture. But the fact that they've acknowledged that from a 8.5% forecasted GDP growth, which Prime Minister Economic Council had at the beginning of the year, they've slashed it down to 6.7%. So that revision, at least admission of problem, to my mind is something which is quite commendable. Jagannathan, now the Prime Minister Economic Council always comes out with an optimistic number. Currently, they are forecasting a GDP growth of 6.75% for FY13. So can I read in between line and can I safely assume that a number of 6% for FY13 will also be difficult?
Absolutely. I think you have hit the nail on its head. I think the various predictions that are coming around by various economists across the world suggest that it will be easily sub 6%. That's the biggest worry. I think if that means that even the corporate earnings may not be as exciting, that's one more worry. Especially because fair enough, liquidity is taking the markets up. If the sub 6% growth and corporate earnings not up to the mark, how far this rally alone on the base of the liquidity can be sustained? That's the big problem. If the reversal happens, when the market go down, it can be a painful journey.
Do you expect any fireworks to happen after the CAG report, which is supposed to be tabled today in the Parliament?
Not really. I think as we just said that fundamentals, when they are not the theme and the liquidity, I think liquidity can take all these things in the stride. But having said that, we should not ignore those things. I think as we have seen with what happened with the 2G, and it has went more than 2 years of drama after that CAG report on 2G spectrum. So even this can have equal implications. That cannot be ruled out. But when the liquidity is the thing, as long as the music is on, better to dance.
Okay, and we certainly are doing that in a market like this. Jagannathan, thanks very much for joining it with that perspective. 3 points away from 5,400. What has Prakash Gaba identified? Prakash?
Well, as far as I'm concerned, I like Gujarat fluoride. Looks good to me. Got some kind of a good base formation around the levels of 350. Give some time and space, it can climb to levels close to 390. It's a good up move from here as possible. Second stock is MTNL. The way it's moved around from the level of 26 to 34, looks like 34 is getting tired out here. So I would have a tight stop above these levels of around 33 and trade down for a levels closer to around 32. So one short and one long.
You're looking for United Spirits, Prakash. In your own terminology, you always look at the structure first.
Yes. I like the structure. It's beautifully positive structure. I like the base formation closer to 600. Did some kind of a consolidation, moved out of 780 zones. I think it's heading towards 1080, 1140 levels or so. I say it can go up to levels closer to 1000 first and then to 1140 per se. But yes, it's certainly, I would say 900, 880, 900 zones. It's a very, very strong support for United Spirits.
Okay, thanks very much for those trading ideas. Prakash will touch base with you in a short while from now. But some news, in fact, which is coming in, that crucial CAG report is to be tabled. And from what we understand, 3 reports have already been tabled in the Parliament. The CAG report on coal allocation has been tabled on the same. Just to walk you through a background, remember, that was likely to be tabled today. The BJP-led opposition that has demanded a thorough probe into the allocation of the coal blocks which were made between the years 2005 to 2008. And that is likely to criticize the UPA government for not tabling that in the last session. Now, according to reports, it is believed to have concluded that private sector companies, the likes of Tata Group entities, Jindal Steel and Power, as well as Anil Agarwal Group companies and SR Group Ventures, they were among the bigger beneficiaries. And the CAG report was slated to be tabled yesterday. But remember, on account of both the Houses of Parliament being adjourned due to market respect for late Union Minister Vilas Rao Deshmukh, it has been now tabled today. And Of course, the CAG has estimated that close to 1.86 lakh crore rupees was the loss of the exchequer on account of allocation to these coal blocks, and that the Prime Minister held the portfolio between 2006 and 2008. And that's the latest that we have coming in. Some stocks that are likely to be impacted on the back of this news, these are the companies, in fact, which had their coal blocks between 2006 and 2009, and they have also been named in the report, include the likes of Tata Power, as you can see on your screen, crashing in just the last few moments. You've also got an Adani Enterprises, an Adani Power, JSPL, Bhushan Steel, and a Sterlite Industries. So some of those counters coming up on your screen, clearly reacting.
We'll stay with that story, but let's connect with Nitya for more details. Nitya? She's not there. We'll connect with her. But I guess CAG report, she's ready now. Nitya, can you hear me? Is my voice reaching you?
Hello?
Hi, Nitya, this is Nikunj from the studio. Is my voice reaching you?
Yes, sir. Yes, sir. Absolutely.
What do you have for us? What's the latest?
So what we're picking up is the CAG report has been tabled at Parliament. We're given to understand that there have been strong recommendations for an immediate need to switch over to auctioning of coal blocks going ahead. We're given to understand that the quantum that they're seeming to indicate due to government's allocation and not auction of coal blocks is to the tune of 1.8 lakh crore rupees. That is the loss that the CAG report seems to indicate is what we're picking up. Also, what we're given to understand is that they are recommending that there should be a screening committee set up immediately which actually takes care of this entire auction route in order to ensure that it's carried out in a free and transparent manner. Now, the basic pointers from the CAG report indicate that private power players have benefited to a large extent from this particular allocation policy of the government of India, and between 2004 and 2011 there has been no actual transparency in this particular mechanism. We're given to understand that there is strong recommendations coming in from the CAG that auction should be the only route forward, and a policy on the same needs to be formulated right away.
Has the report mentioned any specific names, or it's all conjecture?
We've still not got the report in our hands at the moment. We're not able to pull out specific names of power companies, but the draft report does seem to indicate the likes of JSPL, Tata Power, Adani, SR Group, GMR, amongst others, and we're given to understand that those names will be retained as primary beneficiaries in the final report tabled by the CAG. We're just minutes away from getting that report in our hands, when we can give you a little more detail as to what private companies have been named as actual beneficiaries.
With that report, Nitya, we need to know the names. Thanks for that update. Let's stay with some of those power companies, and I guess some names are well known. Companies which did get those coal blocks in the period of 2004 to 2007. Adani Power, JSPL, GMR, Lanco also, they got benefited because they have got some coal allocations. Maybe Jaiprakash Associates. The bottom line here is that private companies which wanted to set up power plants in between 2004 and 2007, they have benefited because they have misused the coal mines to their benefit, and they really never used those coal mines to really kickstart their power capacities. Gargi, that's the sum and substance of the CAG report.
Well, Nikunj, if you look at the stock impact and what we are focusing on right now, if you look at an Adani Enterprises, if you look at a JSPL, these companies were given blocks which were big enough, and they could have a material impact going forward on the various power plants that the company had planned going ahead. And in case there is some, something impacting these captive coal blocks, that could be of importance to watch for. It's too early to say what the government will really go ahead and do, if there will be any further inquiries, etc. But for now, if you look at the sentiment on most of these stocks, it has been a bit weak. JSPL, if you can see that, the small decline there. Adani Enterprises seeing a big one. Let me name a few companies that have some significant coal blocks coming their way between 2006 and 9. We have a Tata Power, Adani Enterprises, both these reacting negatively. Bhushan Steel also saw some bit of decline coming in. Sterlite Industries, by way of Sterlite Energy as well as Balco, has received some coal blocks. We also have smaller mid-cap and small-size companies like a Monnet Ispat, again a very important one because they have a coal block on which their captive power is really dependent. JSW Steel also had a coal block that was allotted to them. Also, take a look at Prakash Industries and Jai Balaji. Both these also have some coal assets, both these being allotted in that period. So probably too early to say the impact, but the sentimental reaction surely coming in because there could be, going forward, some impact on these captive coal blocks which could dampen their plans for steel, sponge iron or power going forward.
Some of the assumptions could also be imaginary. Nobody has a handle on what was the total coal block allocation, what is the kind of misuse, what is the real value of coal, because coal prices in last 4 years for sure have improved.
That's right, Nikunj. And if you look at the entire coal block, the method of allocation, if you see it internationally too, there are various methods that have been done. Sometimes when the government is just giving out a lease, usually there is not any inflows that the government is really getting. If you look at the Australian method too, I believe the government will put that argument that internationally too, we've seen similar kind of coal block allocations done, where it's more for, improving the coal production of the country than receiving, benefits out of selling that land or probably giving it out on lease for mining. So there could be different arguments that can be laid on this front, but I believe what we need to see is what the government really reacts in terms of the coal block auctions.